Welcome, Philipp. Thanks for being with us.
Thanks very much for having me.
So why is Protos better exposure to Bitcoin and Ethereum?
Well, Nisa, thanks for the question, of course. So what we do is active trading of Bitcoin and Ethereum, to name two big examples. And the strategy that we apply is a trend following strategy. It's a very well-known strategy. It's one of the biggest hedge fund strategies in the traditional world. And what it does is basically provides exposure into upward markets and cuts down the exposure if markets are falling. And that obviously replicates a call option in a sense. And that obviously worked pretty well in the past of Bitcoin, since you had massive sell-offs and but then at other times rallies that you were able to participate in.
And what are you seeing this week in the markets in terms of difficulty and hash rates?
Yes, good question. I think it's a very interesting week. So, I mean, obviously, Bitcoin price is kind of flatlining around this $9,500 level. And on the flip side of it, the hash rate futures are trading at a similar level. The Q1, for example, next year is trading at 21.4 T at the moment. And if you compare that to the difficulty today, that is about a 56% increase over the next 9 months. So that's basically the expected difficulty increase over the next 9 months. That's what the market is saying. And that sounds like a very high number, and it is, right? So 9 months, 56%. That means basically the production for the mining companies will drop by that amount over the next 9 months. What's interesting about it is that they have been trading very, very similar. So Bitcoin price up has also resulted in a hash rate going up, and vice versa. And we've kind of analyzed this study and analyzed this data, and obviously this is brand new as these hash rate futures have been just introduced a couple of weeks ago by ftx.com. And what we think is interesting is that they do trade so similarly, which makes sense if you think about it, that if the Bitcoin price goes up, it also means that the mining companies have more profit, and that will allow smaller miners or less efficient miners to come in and turn on machines again, and that will drive up the hash rate, right? So there is this direct relationship between the two.
Any predictions you want to make about where you see things going in the next few weeks?
Yeah, so what's interesting, we've seen the difficulty being adjusted yesterday, quite largely, 14% in fact, which is tremendous. And it actually reversed the difficulty steps down, the adjustments the weeks before, after the halving, right? So the halving had the effect that obviously the production was cut in half to the miners. Naturally, a couple of miners had to shut down, and the expectation, of course, was that this would be about 1/3. And in fact, it was only 15%, and that would have been reversed immediately 4 weeks later, right? So what's interesting now is that if the Bitcoin price doesn't go up to the $10,000, $10,500 level, you really need miners at an efficiency or at a operating cost level of 3 cents per kilowatt hour, including operating costs and electricity, which and the average you can think of is more like 5-6 cents. So for some reason, the miners are extremely bullish on the Bitcoin market, apparently. So we think Bitcoin price should appreciate quite in the short term, 4 or 5% in the next couple of days. But of course, that's obviously always the market.
Thank you so much for being with us today, Philipp.
Thanks very much. Thanks for having me.